Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. I'm just jumping back on here to give you an update, look at the price action that occurred over this past week, as well as update you on my position here. Today is July 26, 2026. And again, what you're seeing here on my screen is my live trading account. And I do these weekly updates to just give you a glimpse and to allow you to test drive, if you will, our trading system. So my position that you see here on my screen and that you're going to see here in just a little bit is the position that I'm carrying for the month of July here using our True Alpha trading system. And so again, this is just to give you a glimpse of how I'm using this system to position myself and manage risk against the major indexes. In this case, I pair my position with the S&P 500. So everything that you see here on my screen, the position that you'll see here in a little bit, I'm entirely allocated to the market here using S&P 500 products. So there's not any additional individual stock positions or anything else going on in here. It's simply S&P 500 products. And we teach you how to layer different products together, incorporate a hedge, pair your position with the index, and dynamically position yourself and manage your risk using this system. In order to just carry a more dynamic position against an index than, say, just being passive an index fund, right? However, if you're somebody who has utilized index funds in the past, what you and I and a lot of people are well aware of is that you've likely performed very well over the last decade, 2 decades, however long here. So what this system is doing is just saying, let's make that same idea a little bit more dynamic and use this system here to layer in a hedge, maybe add some leverage to your position, and just be a little bit more dynamic against an index like that. So anyways, with that, let's go ahead and jump in here and get started. I'm just going to zoom in on the price action that occurred within the last couple months here. And what you'll see here to begin with is just the yellow line here that's on my screen that marks this candle, which is the Friday before this last Friday. So this is July 17th. And what I've marked here by this yellow arrow and line that's on my screen here is where the S&P 500 futures closed Friday before last Friday. So on July 17th, the market closed at 74.94.75 on the S&P 500 futures. And then we had Monday, Tuesday, Wednesday, Thursday, and Friday. So over the course again of Thursday and Friday, we saw a pretty large sell-off in the S&P 500, which correlates to the futures here. And so we did close right here at 74.44 on the S&P 500 futures. That move from last Friday to where we are this past Friday is a move of about 0.68% lower on the S&P 500 futures here. Okay, so we did continue this slide lower over the course of this past week. If we look at the blue line here, which marks where the futures closed at the end of last month, which is June 30th. So from where the market closed at the end of June to where we are as of this past Friday, we are sitting at a move lower of about 1.30% on a monthly basis here. Okay, so now I'm going to just zoom out here to show you where we are on a year-to-date basis. So which is indicated here by the red line on my screen and the arrow here. This marks the close where the S&P 500 futures closed at the end of last year to, again, where we closed this past Friday. You're looking at a move higher still for the year of about 7.98% higher on the S&P 500. So all in all, we're about 8% higher on the S&P 500. And on a year-to-date basis, that's still just, despite some of the volatility and what we've seen over the last couple weeks here, we are still sitting higher here on a year-to-date basis, which is good. So again, I don't position myself or manage my risk around fundamental data. I don't use technicals in here. I know I have some lines on my screen, but this isn't to mark any kind of levels of support and resistance. So I'm not using any kind of technicals here. All these lines, of course, measure is price action on the S&P 500. And there's a whole part of our tools application that incorporates historical moves on the S&P 500 into the analysis that we show you in how to position yourself here and also manage your risk. But the thing that's important to note is that, again, I'm not using any type of fundamental or technical analysis in the way that I position myself or manage my risk using this system. I'm also not, I pay attention to news headlines. I pay attention to macro data, what's going on around the world, but none of that's really driving the way that I make decisions concerning how I'm positioning myself and how I'm managing risk on my position here. So what I do use is price extremes. So I'm positioned here and I manage my risk based on price extremes. And so it's more of a statistical approach than it is really anything else. But I like that because it simplifies the process for me. It takes the emotion out of it. And I can simply say, okay, well, what's the price extreme that the S&P 500 appears to be at here? How do I want to position myself? And then from there, over the course of the month, right, if we do get some extreme price action inside of the S&P 500, then I'll use those moves as opportunities to make adjustments to enhance my position. And you'll see whenever I switch over to our tools application here in a little bit that I have a very visual approach, a very calculated approach in the way that I do that. Okay, so anyways, that's just a recap of some of the price action that occurred over this past week and where that again puts us on a month-to-date basis as well as a year-to-date basis. Now I want to switch over and just show you my actual position and what that looks like at this point in time. So I'm going to pull that up for you here. Okay, so what I have pulled up on my screen here is our S&P 500 spin calculator. And I'll just highlight here that, again, we're looking at the put position tab of the S&P 500 spin calculator. This is one section of the tools application that we give you access to when you purchase this course and we teach you how to use this system. You get the tools application here. And again, this is the spin calculator, specifically the put position tab of the spin calculator. Now this tab in here allows you to lock in just a static view of your position so that as the market continues to move around in here, it's not continuing to update your position. So once you've gone in and executed your position, this allows you to lock in a visual of that position. Okay, and so again, at the end of last month, this is the position. These are the inputs that I made to my position here using the spin calculator. Okay, it's going to display my core position that I'm carrying, the amount of capital that I had or the starting capital that I have in this position. And then it also is going to show, again, the core position here, which is the main driver of my distribution of risk and reward, primarily my risk, right? And then over here, you do have this hedge here that I'm incorporating into this position as well. So again, these are the inputs driving all the information that you're going to see down below. So if I remove that from here and we just scroll down inside of here, what you're going to see is a display here of the position that I have on for the month of July. I'll just reiterate, over here on the left is the S&P 500. In this column here, all this is tracking is percentage moves on the S&P 500. So if we get any percentage move higher on the S&P 500 futures here, it's showing you up beside that where that puts the S&P 500 futures. Okay, same thing to the downside. If we get any percentage move lower inside of the S&P 500 futures here, where that's going to put the S&P 500 based on that percentage move lower. Now this tool in what we're also doing here is we're pairing our position with the S&P 500. So my position here is going to move lockstep with the price of the S&P 500 and the S&P 500 futures here. Okay. And so the column that becomes really important to me here is this middle column, which is basically highlighting my performance relative to the S&P 500's price action. So if we get any percentage move higher, this is going to tell me how much I'm either trailing the S&P 500 or outperforming the S&P 500 if we move higher. And the same thing to the downside. It's going to show me here if I'm underperforming or outperforming the S&P 500 if we move any percentage move lower inside of the S&P 500. So again, just to show you here, the type of position that I'm carrying for the month of July is one that by design puts me in a position here to generate basically a market return if we move anywhere higher inside of the S&P 500 for the month of July. Okay. And that's real important because, as I told you, and if you follow my updates here, you know that I'm carrying a hedge to this position. Well, anytime that you carry a hedge, you're generally having to give up something to the upside. And you'll see here that I'm very close to matching a market return if we get any type of a move to the upside inside of the S&P 500 here. Well, again, to the downside, I have, if we do move lower inside of here, you can see that I have this hedge that starts to kick in right at about right below 5% lower on the S&P 500. So if we do get some type of a substantial move lower over the course of this month, then you'll see that I do have this hedge that starts kicking in for me. And so by design, this is the position that I want for the month of July. We're sitting here at all-time highs. We're starting to see some volatility come into the market. We saw some of that in the price action last month. And so the way that I want to be positioned here is that I do want a hedge that's going to give me some protection to the downside if we do see some type of a substantial move lower inside of the S&P 500 here. Okay, well, I don't know when that move's coming, but it's going to happen eventually, right? And nobody knows if it's tomorrow or later next week or next month or when, but I'm not, again, trying to predict that. Therefore, I'm carrying a position, again, that, as I said, gives me the market return to the upside or very close to that market return if we do continue to rally higher from here. But I do want to continue to carry a hedge here, and this position looks very similar to the position I've carried for most of the year here, where I have this hedge that does kick in for me to the downside to offer me some protection to the downside. So I like the way that I'm positioned here, and I'm positioned this way by design. So I've watched the way that this is calculated, primarily this column here. I'm primarily watching, based on the way that I've positioned myself here, how in line with the market return is this placing me? And then from this point forward for the rest of the month of July, my goal here is just to make any adjustments that I can based on the price action that we're seeing, to make any adjustments that I can that may enhance this distribution of risk and reward that I have onto this position. So I'm not looking to make any adjustments that are going to substantially change the overall distribution of risk and reward that I have to my position here. I'm just looking to tweak it ever so slightly to enhance it or improve it over the course of this month. And so, as I showed you and I've talked about in last week's update, I did have this adjustment that I've made to the position here. And then you'll see what's new is that I did make this adjustment this past week based on the price action that we saw inside of the S&P 500. And as I showed you earlier, we did have a pretty large move lower inside of the S&P 500 last week. And with that move, I chose to make this adjustment here, which as I'll just reiterate here, both of these adjustments were entirely made to improve my upside that you can see here. Now, if you go back a few weeks to where I show you what this originally looked like whenever I placed my position at the end of last month, you'll see that I've improved my upside to this position here, okay? And another thing that I'll just reiterate here is that, where we closed this past week is right about, it was 74.44 on the S&P 500. So we're sitting right here within this range. And if we closed right here and now this is we'd be sitting right about where I was positioned at the end of last month anyway. But now if we do see some type of a substantial rally, as I just showed you, I have improved my upside that I have to this position here. And what I'm going to continue to do over the course of this week is just dare the market to come get me. Now I do have this range right in here, that I'm my primary focus now is to close this range right in here. And so, but I'll dare the market to continue moving lower, and I'll just continue using those down moves to improve both to close this gap that's listed right in here and improve my upside. And so all in all, what would be nice if I could just get all of this to at least to zero, so that anywhere above 5.5% in here, I'll generate a market return while I continue to carry this hedge to the downside, so that if we do see some type of a substantial move lower to close out this month, then I'll have this hedge kicking into my position that you see here. Okay, so that's an update on my position here. Hopefully this is helpful, just kind of to look over my shoulder and see how I'm using this system and these tools to position myself and manage risk. And again, that's just to give you really not only an example of how you can use this system, but it's also giving me the opportunity here to be fully transparent with you about, how much I'm allocating to this position, how I'm actually positioning myself, and using this to manage risk week to week and month to month. Okay. And so with that, I hope you have a wonderful rest of your week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.